Hey, good morning, it's Owen Bigland. This is the Inside Edge video blog. Just got an email from one of my mortgage brokers, an update on the current mortgage rates. And right now, a well-qualified client can lock in a 5-year fixed term at 2.55%. 2.55%, you can get a variable rate at about 2.2%. So this is all-time record low interest rates. A lot of people don't realize that it's actually less expensive now to buy a one-bedroom condo in Yaletown than it was back in 2008. Now, yes, in 2008, that Yaletown condo was about $40,000 less than what it's selling for today, but you were borrowing your money at about 4.2%, not 2.55. So when you amortize that over 25 years, it's actually a little bit less expensive now than it was back in 2008. Now, I'm always working with a lot of younger buyers, first-time buyers. And whenever I'm working with someone new to real estate, buying their first place, they've saved up their down payment and they're buying their first one-bedroom condo, I always tell them that yes, interest rates are low, rock bottom 2.55%. And if the bank tells you you can borrow $400,000, that's what they'll lend you, grant you a $400,000 mortgage. It doesn't always mean you have to take the full $400,000. There's no shame in, say, taking out a $350,000 mortgage and buying a little less than what you could afford. Because I always stress to my first-time buyers, or any buyers really, is that you always want to leave yourself a little bit of a buffer there. Let's face it, at 2.55%, those interest rates now have nowhere to go but up. So you're good for 5 years at 2.55, but in 5 years, don't be surprised that that interest rate is squeaked up to 2.95, 3.25, who knows, maybe even 3.5%. And that could add several $100s a month to your monthly payments. So you should be always leaving a buffer there. The other thing I tell them is you can learn from other people's mistakes. Several of my best clients are the Canadian banks. And I list and sell their foreclosures and court-ordered sales. Now, a lot of people don't realize there are hundreds and hundreds of foreclosures that are sold every year in downtown Vancouver. The reason a lot of people don't realize it is because, unlike in the United States, in Canada, I'm not allowed to publicly advertise that this unit that I'm selling is a foreclosure or a court-ordered sale and TD Bank is the owner. We have to keep that pretty low key. We're not allowed to publicly advertise it. Now, I can tell people face to face, of course, but I can't mention anything on the MLS that this is a court order or a foreclosure. So I can tell you from experience, I'm not privy to all the foreclosures I handle and what their personal financial situation was of the former owner, but I can tell you, of course, it's always financial. And it generally stems from taking on too much debt, too much risk. The other thing that a lot of times triggers a foreclosure is a heavy special levy or assessment on the condo. So they need to get a rain screening job done, and it's $40,000, or all the windows need to be replaced, and they levy all the owners $15,000. If they've just bought the unit and only owned it for a few years and don't have any equity built up, that $15,000 can be the start of getting into foreclosure. They get behind on their mortgage payments, they can't pay the levy, the strata will put a lien against the title, and it can start a downward spiral from there. So young buyers, especially first-time buyers that are putting up pretty much, scraping together all their money for the down payment, always leave yourself a bit of a buffer there. For interest rate hikes coming up down the road. I don't know when they're going to be, but there's only one way to go from here, and that's up. You should also leave a buffer for any unexpected maintenance, any special levies for balcony repairs or boilers or elevator upgrades. It can be $1,000 up to $40,000. So always leave a little bit of room there. These interest rates are fantastic, and take advantage of them by all means, but there's no shame in maybe buying a little less than what the bank tells you can qualify for. I'm Owen Bigland. As always, thanks for watching. I'll see you next time.